Yo, what's up guys? Nate the Robber here. I want to show you a stock that I actually just picked up. And I don't know if you can read this sign, but this says invest with us, BRX. This is a place where two of my brothers work. They work in this little, I don't know, what would you call this, like a half mall, but they focus on anchor tenant properties where there's the main tenant there, which is Publix. You can't see it. And then there's a bunch of small businesses next to it. And there's supposed to be a lot of synergies in this form of business. But anyway, I really like this stock. They got a dividend yield of well over 4%. And the sign there, it said invest with us. So they're like advertising their stock on their property. So this is ticker symbol BRX. They're a REIT, a real estate investment trust. And let me show you their financials because they're actually really impressive. And I'll show you a few slides from their investor presentation because we got to see what their top tenants are. And all their top tenants, their stocks are at all-time highs. So let's check this out. So now I'm going to show you a few slides from their most recent investor presentation, and then we'll look at how many shares I own and dig a little more into the financials. But this company isn't huge. Remember, they're a $3 billion company and they have a nationally diversified portfolio of 360 shopping centers. So look, they got 360 shopping centers, and the percent leased of those, and 95% of those are leased, which is pretty cool. And check this out. Here's the main sector they focus on. They focus on grocery stores. And if we look at the grocery store industry, we look at Walmart, we look at Kroger, TJX, Public Stock. They're all at all-time highs right now. And so that's a really great industry to be into right now. So TJX, that's their largest tenant. They got 91 stores. That stock is at all-time highs. Kroger's a great one. Burlington, they got 1.7% in Dollar Tree. Not the highest quality tenant, but still Dollar Tree's publicly traded. They are making that income. They're not losing money, which is good. And Publix as well. So Publix is a very high quality tenant. They're not publicly traded, but you're actually able to see their stock. And we can see Publix stock is at all-time highs right now. You're not able to invest in it because they're not public, but we can see that Publix is doing great. Then of course we got Ross, Five Below, they're public. LA Fitness, and Amazon Whole Foods. So they even got some Amazon Whole Foods that makes up 1.1% of their annual base rent, which is pretty cool. But yeah, we can see that 80% of their annual base rent is derived from grocery anchored tenants. So those are the very high quality properties that I like. And their focus plan has driven a 35% increase in the annual base rent per square foot. And here's some of their best, tenants that are not the anchor tenants and are not the grocery store. So look at this. They got Sprouts Farmers Market. Well, that's an anchor tenant. But then they got Chick-fil-A, Cava. Those are really, really popular. Then they got Whole Foods, Chipotle, Ulta Beauty, Chase. So they're in a bunch of different industries as well. They got banks, Shake Shack. So a lot of high quality names that we see there. And they say they outperform their peers. We can see the same property net operating income growth from 2019 to now. It's outpaced the peers. Same with the new lease spreads, in place change. All that's pretty cool. And remember, the small shops are not the anchor tenants. So it's like all the things next to it. And they have an occupancy of 90%, which is actually really good. But the anchored properties, this is a 97%. So they average it out to a 95.4 total leased occupancy, which is very good. 95%, that's pretty good. And if we scroll down to the very bottom here, we can kind of see we can look at their debt right here. So actually we want to look at their debt because they have 100% fixed rate debt. So look at this. Their net principal debt to adjusted EBITDA is 5.8x. And just to put this into some perspective, I just looked this up. It says Realty Incomes is a 6.5x. I don't know if it's the exact calculation, but anyway, it seems to be reasonable for these real estate investment trusts. And they're triple B rated from S&P Global, which is pretty good. Triple B from Moody's as well, and Fitch. So they're credit rated. They're a quality company. We can kind of see their maturities of their debt that they have to pay off. They have a bunch of liquidity on hand, so they're chilling right now. We can see the annual growth of their dividends. So who knows what it's going to be in the next couple of years here. So that's what I really like about this company. And if we scroll down here, to their very last slide here. So yeah, this is the portfolio compensation. Last slide we'll look at here. We can see 17% is from restaurants and their grocery stores. And then look at how diversified they are. They're in so many different sectors here. Personal service, off-price apparel, fitness, value, general merchandise, home decor, medical. So yeah, they're in so many different properties. So remember, they're not a huge company, $3 billion market cap. But let me show you a little bit more about their financials and how much of the stock I own. So here we are now in my Robinhood account. We're down 1.3% on the day. And I want to show you how many shares of this stock that I own. So first, let me tell you, it's in my Roth IRA, which is only $200. It's not that big, but I just started my Roth IRA a few months ago, and I decided to have most of this portfolio literally just in Brixmor, which is a REIT, a real estate investment trust.
and I got 6 shares of them. Remember, it's not a huge position in them, but still, I really like this company, and I'm gonna build my position bigger into them in the future. But I already have a lot of REITs. Another REIT which is pretty similar to that one is Realty Income. I get $7.91 every month from them. I have $1,800 in that one. And I don't want to have a huge concentration in just REITs, because I also own another REIT in here. If we go to my Moomoo account, which is now worth over 10,000, we have 26 shares of CubeSmart, which is another real estate investment trust, and all of these have to pay out most of their money in the form of dividends by law. And here's this one right here. Actually, Bricksmore, I lied. They're an $8.4 billion company. I didn't know they were that big. If you look down in the middle there, they have a 4% dividend yield. And let me show you their dividend payout ratio, how much they make, how much it costs. So for REITs, you don't look at net income, because if you did, they would have a really high payout ratio. You actually want to look at the net income plus the depreciation and the amortization. And that is this number down here. And in the most recent quarter, they made $157 million in the most recent quarter. And let's see how much their dividend cost them. So they made 157, and their dividend only cost $82 million. So their payout ratio is just around a 50% payout ratio, which is very fair if you ask me. And they're not diluting you as the shareholder. If we go to their total common shares outstanding, you've only been diluted 0.49% year over year, which is pretty much nothing. So this company, I really like them. We can see that they're organically growing. They're not growing their numbers because of some acquisition or anything like that. But yeah, and right here we can actually see how much AFFO they made. They actually made 52 cents in the most recent quarter, and their dividend, if we look right here, only cost 27 cents. So that really is right around, 50-60% payout ratio, which is very fair. If we go back to the news tab here, they actually just rose their dividend as well. Check that out. They rose their dividend by 5.5%, which beats inflation. But more importantly, here's what we want to look at. Check this out. They rose their full year FFO guidance to $2.13. So we'll go with the low side here. We'll do $2.13, and let's just do a very fair multiple. Let's just times that by 15. That is a 31, or let's call it $32. So if they trade at 15 times AFFO, this should technically be, according to that math right there, according to that multiple, a $31 stock price, and today they're at $27.80. So hey, that's not the best way to value a stock, but that's just kind of my thoughts on them. They're trading at 12 or 13 times AFFO. They have a 50% payout ratio, and a lot of their top tenants, are very high quality grocery stores, anchored tenants. And I took some more footage here of the open air property, and check this out. So of course you go to Publix to get your groceries. You can get your hair cut here. You can get your nails done. There's a UPS store. There's a Geico, there's little cupcakes. You can get food. You can get your nails done. There's a chiropractor, a dog store like a vet. So yeah, while you're at the grocery store, might as well get your hair cut done, your nails done. So there's a lot of cool synergies in this business. And if you remember, this company's top tenant were grocery stores like ticker symbol TJX. This was their largest tenant actually. So let's look at TJX stock. If we kind of just zoom out on them, look at that. They're one of the grocery stores. They're at all-time highs right now. They have a 1.34% dividend yield. Let's check up on their financials, because this is one of their tenants. I mean, look at the net income growth on TJX. They make now well over $1 billion every quarter, and the whole company is worth $126 billion. So yeah, TJX is a good one. Their second largest one is Kroger, right? So if we look at Kroger stock, ticker symbol KR, kind of just zoom out on them, they're at all-time highs as well. Look at Kroger. They're doing great. They have a 2.2% dividend yield. And look at the actual PE ratio on there. Kroger is actually trading at a pretty, fair valuation, 13 times forward earnings. So yeah, Kroger's doing good. I don't believe Burlington is public, but they are public. Check this out. Remember, this was their third largest company. I actually did not know they were public. I'm pretty sure this is one of their tenants. So yeah, Burlington. Yep, so this is them. This is the grocery store. Look at that. They're making money as well. Look at the growth on there. They don't lose money. They lost money like back here, but that was from the pandemic. But look at that. Burlington's cranking out net income. Same with operating income. Yeah. So hey, Burlington, TJX, Kroger, these are all their tenants that are doing very good right now. So that was pretty much all I wanted to talk about in this video. Hopefully I introduced you to a new stock. Don't forget to drop a like on the video. And again, I don't have a huge position in this company because I already have a bunch of other REITs. I got Realty Income and CubeSmart, which already makes up well over 10% of my whole portfolio. So I don't know what I'm going to do next. So let me know your thoughts on this one in the comments. I'll make sure to look at all of them. Don't forget to drop a like on the video and subscribe if you want more videos like this, and I'll catch you on the next video. Thanks again.